Okay, everybody, here we go. It's me and you. Love this part. Let's get the show on the road. So this Tuesday, September 27, 2022. As I am doing this lovely video blog, the market seems to be giddy about something. Oh yeah. Do you know what's going on? Maybe you do, maybe you don't. But here's the inside scoop. Fed President Charles Evans was floated out to ease the market, to jawbone the market. Now, what specifically did the man say? Well, he's optimistic. He's optimistic that the United States can avoid a recession. How about we're already in a very deep recession, sir, and we're going into a depression, way worse than that, actually, a complete meltdown of the system, and it's this guy himself and his other freaking counterparts who dwell in the halls of the Federal Reserve who are responsible for the whole entire thing. So this statement that he made earlier has got the market all happy and euphoric and orgasmic. Oh, stock futures are higher across the board. But you see, I don't give a shit about that. And neither do you. Because you and I know exactly where to look. These deceptive tactics that the central banks of the world all use, okay, they float out this creature, they float out this thing over here to try to jawbone the market. You understand what the market is, right? It's a twisted, demented child mentality that has to constantly be reassured that everything's going to be fine, going to be just great. No, that's really what it's all about. So, and you know, it's headline news driven. All right. So when they float out, some bigwig like this here to say everything's gonna be fine, don't worry. Let me hold your hand, and it's all gonna be great. Oh yeah, we get this euphoria here. Is it gonna last? Look, I'm gonna tell you right now. It depends on if we see some kind of stability here in the debt market and some kind of normalization here with this knee-jerk higher to the flight to safety of the U.S. dollar. Right now, the Dixie, or the relative strength of the dollar, is lower by about 0.42%. 10-year yield 3.86% here, okay? This doesn't really look too pretty to me right now, and I'm not all giddy or euphoric, and I'm definitely not orgasmic over Fed President Evans and his comment. No, because you see, you and I know where to look. Here's the story, okay? We have clearly an unstable debt market, and they could float out whoever they want to float out, and they floated out Fed President Loretta Mester, the girl of the Fed. She came out yesterday, and she said, "Oh, it's hard to predict inflation." No, it isn't. You and I have been clear on this since the get-go, but she has no idea. She's very hard to predict. Look, this is what they do. It's the same mechanism we see repeatedly with these things. People, look, we got to end this organization. I don't know how to do it. Maybe some of you do. We could end the Fed in a nanosecond, but no one's going to go for it. If we prevent the Federal Reserve from issuing $1 single of more debt, just one, the whole thing implodes. It's over. Okay, we end the reign and power of the Federal Reserve, but it won't happen. Between our policymakers who are going to put forth this policy and this act to pull cash into the future, like things with names like Inflation Reduction Act. Let's spend our way billions and hundreds of billions of dollars. Let's spend our way into lower inflation. Have you ever heard of something more asinine in your life? Probably not, but that's what they had a big party for at the White House. Yeah, I'm not making it up. Look it up for yourself. They were celebrating. They were celebrating. Pelosi and the brain-dead president celebrating their victory here because they're going to conquer inflation. But they won't tell you the truth like I did yesterday. I told you the root cause of the problem is currency. The central banks, they're determined to do it, and they're not going to stop. They're killing their currencies respectively. all in an effort to keep inflation high. They're going to continue to do this to wipe out an entire class of people, to bring about the destruction and elimination of an entire class of people on a worldwide level. But you know this already. So, what else is going on here? There's a little bit of information on the economy I want to talk about. So, durable goods orders missed the mark. Oh, how can that happen when our economy is just so freaking strong? Well, ex-God president, he'll tell you that. Yeah, because he knows nothing else but to lie to you. Now, I want to address an issue here that is actually getting some traction on the mainstream, and there are multiple YouTubers talking about it. You know, this October market surprise, potential crash in October here, October market crash. Look, I'm not one of these guys that's going to point at a date, a time in the future, a biblical passage, whatever it might be that's going to tell you when the market's going to crash here. Because I am more of a person that likes to focus on the data, more specifically this meltdown, and it is a meltdown in the debt market right now. If in fact we continue to see the global bond market sell-off, aggressive sell-off, according to Deutsche Bank yesterday, it's getting some attention. If we continue to see that, well, this whole thing is just over. It could be over today. Okay, it doesn't have to be October. You know, everyone's all, the October market crash phenomenon. Yeah, yes, it's going to happen, yeah. Come on, man. What do you can't make this stuff up, but people do. They make it up so they can get clicks, and people watch their stinking videos, and it's bullshit, okay? These monthly market crash callers make me want to vomit because they're not helping a damn soul out here at all. Okay, I've been hearing about this for how many years, and it just ain't happening. Is it happening now? Could be. But it's all dependent on debt market action, people. You know that. Look, the bottom line is this. Central banks are determined to kill the global economy. They're doing this by design. They're inflating by design. The meltdown in the stock market that all of these people are worried about, okay, is not going to start in the stock market. As you can clearly see, if you've been with me for any length of time, especially over the last several weeks, it's the debt market, which is the driver of the markets. All of it, everything derives value from what's happening in the debt market. And the dollar and other world currencies are a part of it. You understand? So, you know, understanding these little dynamics puts you light years ahead of the curve. We don't have to guess anymore when the crash is going to happen. We just got to watch the action in the debt market, U.S. dollar strength, or better yet, watch the MMRI. I've been beating this to death lately. Mannarino Market Risk Indicator. I mean, we are literally a breath away from extreme risk. And I've been telling you what to do here, okay? The market's giddy this morning. Oh, yeah. But does that mean that it's all of a sudden just going to turn around? Everything's going to be fantastic because Charles Evans, Fed President Evans, opens up his pie hole to tell everyone, I'm going to hold your hand. It's going to be great. We're going to avoid a recession. I can't tell you that we're in one now. It's all lies. It's all distractions. It's all deceptions. So you and I, we're not going to stop or deviate at all from what we've been doing, betting against the debt, becoming your own central bank. Let them play their games with precious metals, people. Let them play these kinds of games because, again, all this is going to flip around from risk on, which the market still remains in a somewhat risk on mode here, okay, to risk off. And that risk off moment is going to really take place when that debt market implodes and everything gets sucked down with it. Cash moves into commodities. I still believe it's going to go into cryptocurrencies as well. That's where I see it. Now, speaking of that, as I am doing this video, again, video blog, you got futures higher across the board. It's orgasmic. You got 10-year yield 3.82. Dollar strength, relative strength, somewhat lower this morning. Okay. Gold and silver catching a bid. Crude oil catching a bid. Bitcoin back over 20,000. That's where we stand. But none of that really even matters now, does it? if you and I are just focusing on this global debt market sell-off, which it's getting some attention on the mainstream media, okay, but it should get a lot more, because this is the key to the entire thing, but you're not allowed to know that either. You're supposed to believe that the stock market is real and there is an actual price discovery mechanism behind assets. Right now, there is none. Zero, okay? Nothing. Are central banks going to finally get in here and start stabilizing the debt market? Are central banks going to finally get in here and stabilize their currency to prevent inflation? Because raising the federal funds rate is doing nothing. Zero to prevent inflation, as you and I already knew from when it first started. And in that video I covered yesterday for you, I outlined it exactly what's happening, but you won't hear a word of that. Nothing on the mainstream, because you see, if people knew the truth, maybe they would do something. Maybe they would, maybe they wouldn't. I don't know. All right, that's it for this morning, people. Look, we know what to do. We know why we're doing it. You understand? All right. Love you a lot. Comment, share the video. See you at the end of the day.